we witnessed a lot of inflows. That was, you call them hot money. They come in to just take advantage of the situations and make profit and exit. And when the dynamics changed, for instance, like she said, my colleague Dami said, the QE, when the Fed, US Fed announced, oh, we might start to taper, we start to reduce our bond buying program. That means they've been pumping $85 billion into the United States economy, and some of those funds go around and trickle down to emerging markets. Yes. So that being that fear or that concern, that, okay, what's going to happen when this stops? And immediately the announcement was made. As of July, $40 billion USD, about $40 billion USD left emerging markets. And Nigeria being one of the major frontier markets that investors normally come to invest, we witnessed that same outflow. As of July, between June and July, June we had a positive inflow. When you net it out within the outflow and inflow, it was positive. It was in the favor of inflow. As of July, it was in the favor of outflow, and we expected that to be the same for August.
Okay, Bia, let me just ask.
Okay.
We know that the Fed Reserve, they're going to be meeting tomorrow.
Okay.
They're meeting for 2 days, tomorrow and Wednesday.
Yes.
And most economists are actually expecting that about 10 billion Naira should be cut. So it's going to taper down further to about $75 billion. Do we expect to see a shock? Like, there's a cold, it sneezes, and everybody will catch cold as well.
Well, we expect to see a shock, but I don't see us sneezing that much, being that the events have already taken place. Investors have already portfolio managers have already adjusted their portfolios, already preparing for an eventuality. So if that happens, I don't see the effect so much like. So there's nothing to really be worried about. What has happened has already happened. So the rumors have already been there. We're just waiting for the news to confirm what's going to happen.
Okay, but you see, we've noticed the bearish run has still persisted in this month.
Yes.
So, at the end of the month, are we also going to be seeing, what we're seeing right now?
Yeah. Yes. I believe the bearish sentiment is going to rule through this month. When the Fed takes their position, we're also going to have our own MPC coming up next week. So the Naira under pressure. Oh, we had last week we saw the oil price firming up a bit, but that was on the back of Syria, the possible strike or military action on Syria. But we now know that the Western powers have looked for a way to resolve that amicably. So supply concerns for oil is not going to be so grave as it were. So you already see the situation that's already coming into play. It's already
coming into play. Now, your report also indicated that there was a marginal decline in the gross domestic product, from 6.56% in the first quarter to about 6.18% in Q2. What factors do you think were responsible?
Well, according to the National Bureau of Statistics, there was a huge decline in oil production, which has been one of the issues that everybody has been talking about, the oil theft and the shut-ins, the force majeures and all that. And Nigeria being hugely dependent on oil, it really affected our GDP. And also noticed a slowdown in other sectors like manufacturing and all. So all this actually contributed to it. Actually, the estimate was actually for 6.72. So when the figures came out, it took a lot of people by surprise because we didn't expect it to be that significant. And so it's a huge concern, and I'm sure it's one of the things these MPs are going to consider in their next meeting.
Yeah, he also talked about the inflation rate as a possibility that it's going to, come down at about 8.64%.
Yes, that's our forecast.
Yeah, so if that actually happens, with the figures that we're seeing, is that supposed to be something to cheer about or something to make us hit the books harder?
Well, inflation so far this year has been benign, it's been mild, and that's because of tight monetary policy stance, which has positively affected the inflation rate. And well, if you look at the month of August, the wage pressure hasn't been there like that. There's been a lot of strikes and all, as most of the students are at home and all that, and we know that a huge demand comes from students and all that. So our regression actually was just a basic, simple regression, nothing fancy and all that. We came up with 8.64. And if you look at the consensus view of other analysts, there's that prediction that the inflation rate is actually going to decline marginally, if at all, to 8.5, 8.6 or thereabout. And with the GDP growth rate of 6.18, that isn't encouraging at all. It's not encouraging at all. So it's not, I would say we need to go back to the drawing board, definitely, and figure out what to do. So the MPC, everyone's expecting that they're going to keep rates the same. Is there going to be further tightening? If there's a further tightening, it obviously has an adverse effect on GDP because it constricts growth. So it's something we really need to consider seriously. And it just brings to the point that Nigeria needs to diversify. If oil production is declining, oil prices, there was a surge initially, but prices are softening down to $112 per barrel and all that. So we really need to do something about it.
Yeah, because, we know that earlier in the year there were predictions of a possible collapse, in oil prices because on the back of discoveries of shale oil and then, the rest of it. But, prices have actually been steady, like you said, at about between $100 and $115 as a barrel. But what's really your take on this? Do you see us gaining any momentum anytime soon?
Well, towards the end of the year, I feel oil prices are going to hover around 110.
Okay.
Around 110.
Why do you feel that way?
Oh, well, like he mentioned, the Syria attack, that has been doused to an extent, because that was actually what people were thinking was going to push prices upwards, but that has been sorted out. If at all, so the possibility or the prospects for oil prices actually on the high side, actually on the decline, because there is now more oil, discoveries of oil going on. There's the shale oil boom. Other African countries too are discovering oil. So if there's that supply influx, obviously that's going to push prices down. The law of demand and supply, the higher the supply, the lower the prices come and all that. And Nigeria also, apart from oil prices, Nigeria is also hit by low production. So it's really affecting our revenue profile. In July, I think our revenue declined compared to the previous month. So I'm not that optimistic of high prices. Let's see between 100 and 110 highest. We see our prices trend towards the end of the year.
Okay, so for you now, looking at markets outside our shores, we've looked at these numbers, and well, it seems as if for the U.S. markets in particular, everything is actually hovering around this two-day policy meeting and the outcome of what it's going to really be like.
Yes.
How do you also see this affecting other markets like in Asia, in Europe, and of course other emerging markets as well?
Okay, being that we've said the United States being the biggest economy in the world, okay, and let's see, whatever happens in that market has a tendency of having a ripple effect across the globe. And there's this relationship that we've observed that it seems as if when these developed markets are on the boom, the emerging markets are on the bust.
Okay.
So that's what we observed. We've seen the United States market resurging. We've seen the Eurozone. We've started seeing growth and all that. So that's also trickled down into their market. So whatever happens in the US market is definitely going to have an impact on emerging markets.
Now, we know that Ben Bernanke's tenure is actually ending,
Yes.
and well, according to what we see this morning from the wires, Lawrence Summers, who is actually one of the contenders for this position, has withdrawn from the race. And everybody was actually expecting him to come in because he has this hawkish stance against, the policies that Ben Bernanke has actually put forward.
Yes.
But now that he's pulled out of the race, we have Janet Yellen, who is a vice chairman,
Yes.
in the reserve,
Yes.
being touted to take over this position. And of course, she seems to be softer and leans more favorably towards the stance and the policies that Ben Bernanke has actually brought out.
Yes.
Is this what they should be looking at doing at this particular point in time? If Lawrence Summers has pulled out for whatever reason, should they be actually looking at putting Janet in as the new chairman, in line with whatever it is that we're seeing playing out on the global markets?
Well, that's for the U.S. policy, for the U.S. United States government to make that final decision. But I think if a Janet Yellen comes in, she's been touted as someone who's going to continue in Bernanke's line, as you've rightly said. And I don't really see anything wrong with that. It's left for them to look at. First of all, you look after your nation first. That's the objective of the United States government, to protect American lives and property before anything that comes second. So if it's as funny as it seems, yes, a Yellen comes in, she's going to toe that line of Bernanke, and that's no problem. And let's look at it, the job growth. This was the first time they now mentioned that we are going to taper based on performance economic growth. And we've seen, okay, unemployment reduced marginally the past month. But when you now critique that, you now saw that, this unemployment actually doesn't necessarily mean that it reduced. It was just the profile, the demographic. We now found that the working population there was actually a change. Probably people got older and passed out of the working age. So they now recorded that as a reduction in unemployment.
Okay.
So there's still need for them to continue. They might still see a need for them to continue that taper.
Okay, well, we'll take a quick break now on the program, and when we come back, we'll continue to look at latest economic developments here in Nigeria. We've been talking so much about what other markets outside our shores are doing to affect how things happen back home. But when we come back, we'll continue with this conversation.